Hello, my name is Nathan Nichols, and I am going to present my analysis of Becton Dickinson and Company, ticker symbol BDX, for the Managerial Finance and Biotechnology course. Becton Dickinson and Company is a medical technology company that supplies healthcare institutions, life science researchers, clinical labs, industry, and the general public. They employ 29,600 employees worldwide in 3 different divisions: BD Diagnostics, BD Medical, and BD Biosciences. They were founded as a company in 1897 and incorporated in 1906. They remained a private company until their IPO in 1962. In their IPO, they raised $3 million of net income to enter into the disposable medical products market. They were the only syringe manufacturer to successfully transition from reusable glass syringes over to plastic syringes, as they were the company that invented the first completely disposable plastic syringe. They were named a Fortune 500 company in 1970, surpassed $1 billion in sales in 1981 and $2 billion in sales in 1990, and since 2002 they've been named one of America's most admired companies and one of the world's most ethical companies. What is it that makes BD an attractive investment then? I am particularly in favor of companies that have some demonstrable product or innovation that will increase their value. So in the past 6 months, there are several things that happened with Becton and Dickinson that intrigued me. First off, today actually on their company website they announced the acquisition of Cato software, which is used for the planning of administration of intravenous drugs. It's also used in nurse bedside documentation, the software developed by this company. So BD will integrate that software into their offerings in terms of products for IV drug delivery. In December of last year, they acquired Safety Syringes Incorporated, which is a company that developed anti-needle stick technologies that BD can also incorporate into their existing syringe products. In January of this year, they received the FDA approval for the first and only closed system transfer device. This is a device that prevents microbial and environmental contamination of the patient while simultaneously protecting the healthcare professional from exposure to potentially harmful compounds or drugs like chemotherapeutics. In October of 2012, they also received approval for a test to detect RSV. This is the virus that causes the majority of cases of pneumonia and bronchiolitis in children under 1. And more recently, they received a research use only approval to detect CRE, which is carbapenem-resistant enterobacters. These have been in the news recently as a so-called superbug in hospitals that is highly resistant to antibiotics. In their genome product pipeline, they are also working on methods to detect vancomycin-resistant bacteria. In terms of their finances, they are looking good, especially compared to their competition. The trailing 12-month EPS for Becton Dickinson is not particularly impressive at 6.76%, but compared to the industry average of negative 13.7%, they're doing pretty well. Their gross margin in the most recent quarter was 59.73% compared to an industry average of negative 30.74%. And their pre-tax margin over the trailing 12-month period is 19.49% compared to an industry average of negative 49.78%. Over the last 52 weeks, their stock has increased in value 16.82%, which is just above the S&P average of 16.13%. Their GMI risk rating is neutral, which I like. I'm fairly risk averse, I feel, as an investor. The equity analysts on Fidelity's website ranked 3 of them ranked BDX as a buy, 3 predicted that it will outperform competitors, and 4 ranked it as a neutral stock. So all of these factors considered, their recent acquisitions and products that have been approved, their strong financials relative to their competition, and their history as an ethical and high-performing company make them an attractive investment for me. Thank you.